Welcome back to Daily Finance News, your trusted source for all the latest updates and insights on the world of finance. Today we have an eventful episode in store for you. We'll be diving into the recent developments in Asian stock markets, the ongoing debt ceiling negotiations in the United States, and the impact on global economy and investor sentiment. So let's jump right in. Our top story today focuses on the Asian stock markets, which experienced a mixed day of trading. While Tokyo and Sydney saw gains, Shanghai and Hong Kong faced declines. The Shanghai Composite Index sank 0.8%, and the Hang Seng in Hong Kong shed 0.3%. In contrast, the Nikkei 225 in Tokyo gained 0.6%, and Sydney's S&P ASX 200 added 0.4%. New Zealand saw declines, while Singapore and Jakarta advanced. These market movements reflect investor unease about the health of the global economy, exacerbated by concerns over potential U.S. debt default, inflation, and recent bank failures in the United States and Switzerland. If Congress does not increase the amount the Treasury is allowed to borrow, the U.S. government is projected to run out of money to pay its bills as soon as June. This scenario could send shockwaves through global financial markets and further weigh on an already weakening global economy. The debt ceiling negotiations between President Joe Biden and House Speaker Kevin McCarthy have been ongoing, with Republicans insisting on spending cuts and the Biden administration proposing to hold spending levels flat. Biden aims to increase taxes on the wealthiest Americans and some big corporations, a proposition McCarthy has already dismissed. Shifting our focus to the U.S. stock market, we observed mixed movements as well. The S&P 500 index edged up less than 0.1% to 4,192.63, while the Dow Jones Industrial Average fell 0.4% to 33,286.58. Another key factor influencing market sentiment is the anticipation surrounding the Federal Reserve's next meeting in June. Investors hope the Fed will refrain from announcing another interest rate hike, as it has done in recent meetings, in an effort to cool business activity and inflation. In company news, Micron Technology, the largest U.S. memory chip maker, faced a setback as the Chinese government banned the use of its products in sensitive computer systems. This move escalates the ongoing feud between Washington and Beijing over technology and security. China cited serious network security risks as the reason for the ban, which Micron Technology has labeled as unsubstantiated. On the other hand, Meta Platforms, previously known as Facebook, experienced a rise of 1.1% in its stock price despite receiving a record $1.3 billion privacy fine from European regulators. Meta Platforms intends to appeal the decision, asserting that it is unjustified. Wrapping up our market roundup, let's take a look at energy markets. Benchmark U.S. crude experienced a gain of 29 cents, reaching $72.34 per barrel on the New York Mercantile Exchange. Now let's turn our attention to currency markets. The dollar saw a slight increase against the yen, rising to 138 yen and 77 sen from Monday's 138 yen and 56 sen. Conversely, the euro declined to $1.0805 from $1.0819. These movements reflect the ebb and flow of currency markets, which are influenced by a myriad of factors, including economic indicators, central bank policies, and geopolitical events. That concludes our comprehensive analysis of the latest financial developments. Stay tuned to Daily Finance News for more updates on global markets, economic trends, and insightful discussions. Remember to subscribe to our channel and hit the notification bell to never miss an episode. Thank you for watching, and we'll see you next time.